Why market is entering into a short-term bullishness again and lateral uncertainty or range for 2023. And we will do both technical and fundamental analysis in this video tutorial, and we will see how both analysis can affirm each other. But before that, let's take some time to read into the disclaimer down here. First, we will discuss why market is entering into a short-term bullishness. We will look into its fundamental reason, then we will affirm it with the technical studies. After this short-term bullishness, subsequently, I believe the market will enter into uncertainty again, or we can interpret it as range market around after the first quarter. All right, let's get into the short-term bullishness. First is fundamental reasons. And this is the US inflation number that we could see that since about 2 years ago, the inflation number has been on the climb from about an average about 3% that we could see it start to move up, and all the way it reached the highest point, which is June last year at about 9%. And it was really scary at a point in time, but good news is that over the last few months, for the last, I would say about 5 to 6 data that we received, that in the December data, it kind of eased off to about 6.5%, and we could see that it gradually declined. The inflation kind of declined. It is bringing kind of good news that inflation could be tamed. And let's look at the technical studies and see if it's giving us some clue here. So what I'm trying to do here is to study into the fundamental and see if the technical affirm that understanding as well. Now let's look at the technical reason here. And over the last many video tutorials, we discussed about how to construct a downtrend line, a standard or a classic downtrend line. And we could see that it kind of break above this downtrend line. In a short while, I'm going to discover with you how to construct this downtrend line. Now, the theory is that whenever this standard downtrend line is being broken above, likely we're going to see a transition from a bearish market to a bullish market. Now let's look at how to construct a downtrend line. And there are two rules about constructing a downtrend line. The first is that we have to find at least 3 significant peaks. Then we try to connect the dots to its best fit. Now this is how it works here. First, we have to start off with a point, which I would like to use this. And then we try to find the best fit. Now the reason of doing that is that once you have discovered that we have more than 3 peaks here. 1, 2, 3, 4. We could see that it kind of aligned perfectly together. So now whenever I see this, I will classify this as a very classic or standard downtrend line. Now whenever this happens, that as it developed, as of the whole of last year, I think you understand the mandate here is that we have discussed about it, that last year was a downtrend, so the whole idea is to sell into strength. And before 2022, it was generally uptrend, but on the third week of 2022, it kind of changes everything. The opposite was true. So the whole of last year was sell in strength, but we could see that last week. Now what we're looking at here is the weekly chart of Nasdaq. Last week, it convincingly broke above this downtrend line. And for that reason, it kind of merged with the fundamental understanding here is that we believe that because of the tame numbers in inflation, likely the market is going to have a short-term rebound. And the strategy over the next few weeks will be, I will look out for every opportunity to buy into dips. I will look out for every opportunity to buy into dips, at least for the first quarter, around there. But subsequently, I believe that the market will enter into a range after around the first quarter. And again, let's study into its fundamental reason first, then we'll get into the technical studies. And on 14 December last year, Jerome Powell given the market a very important clue, and this is what he said. He said that I wouldn't see us considering rate cuts until the committee is confident that inflation is moving down to 2% in a sustained way. So what happened here is that a lot of investors and traders was hoping that the Fed will cut or reduce the interest rate because that the inflation, the CPI number, has been on the decline. We were hopeful until he said this. Now, what he's trying to say here is that no, as long as the inflation or CPI number is at 5%, 6%, 7%, or even at 4%, then as it moves to progress to 5%, it is still not good enough. What he wanted to see is that the CPI numbers or the inflation has to come down into the 2% zone and stay there, stay under maybe about 3%, around 2%, then he will consider a rate cut. And for that reason, let's look at the technical reason. Is there a merge? Is there a affirmation that it match with this fundamental reason? Now let's look at the technical chart. I think the first part why I've discovered that where I believe this bullishness is going to be a short run. Maybe we'll enter in the first quarter. Now this is what I'm seeing here technically, and what I'm going to do here is I believe that this short-term bullishness will enter into the first quarter as it reaches a certain peak. And you have to understand that around the world that the inflation is still pretty red hot. In Australia, in New Zealand, in Singapore, in Japan, that the inflation is still on the climb. It seems like there's no stopping. And a lot of, as I conduct different classes, I surveyed different classes, and about 70% of us, the classes, say that they do not believe that the inflation will come down to, I'm referring to the US CPI, will come down to 2% in a sustained manner, at least for this year in 2023. Now, so as the market on the climb, I believe that the market will reach a certain peak and will start to do a range bound. Now, you have to understand that in behavior studies, when the market range bound, it means that it's range. It also means that the market is uncertain. This is what I'm seeing here. Now, so this is what I'm seeing as it enters into the first quarter, or maybe around there. I cannot be exact, but I believe that the market is going to enter in a range bound, means that they're uncertain what's ahead. Now, I'm going to do this if you still remember how to construct a downtrend line. So first we study the fundamental. Now I'm getting into the technical. Now, we first have to find the most significant peaks, which is here. And I'm going to join the dots together. And this is what I believe here, that it could be the first significant peaks, then followed by second and third, and you join them together. And this became the primary downtrend line. Now I'm going to type this in. Primary downtrend line. And this will be the secondary downtrend line. That's what I'm seeing. So generally, I'm seeing that the first quarter market will be maintain its bullishness. Then after that, the whole market will take some clue from the CPI again. And likely, I do not think that the CPI is going to enter into a 2% zone in a very sustained manner. For that reason, market range bound. But as the market range bound, it does not mean that there's no opportunity. What I'm seeing here is that in 2023, market is going to be very volatile, and volatility is great for traders. Now, so what we're looking here is the Nasdaq Futures, but there's another contract. It's called the micro Nasdaq Futures. Is basically 1/10 the size smaller from this Nasdaq Futures. Now, how to understand this contract is that it states that every minimum movement, which is a quarter point, is worth 50 cents US dollars. It means that $1 is $2 US dollars. 10-point movement, it will be 20 US dollars, and 100 points movement is 200 US dollars. So if you're able to capture 1,000 points movement, that will be 2,000 US dollars. But of course, on the wrong side, it will cost you 2,000 US dollars as well. And I've included some of the past tutorial relating to today's discussion, and it's links below. So keep watching it again and again. You too can get into the market with greater precision. Always enjoy studying into the correlation between the markets, and I hope that today's sharing it will be helpful in how we invest and trade.